It's the 10th of April 2016, and here's a look at the volatility in markets basically for the last 2 years. As we can see here, here's the Standard & Poor's 500 index. That's the US. And I'm showing that first because the US market has been the best in some respects of the many world markets. However, the volatility has caused for trend followers a lot of problems because downtrends are fine, we stay out. Uptrends are fine because we stay in. But volatility means we keep buying and selling. And when I say volatility, I mean moves that are big enough to give buy signals but don't follow through in order to lock in profits. So you keep buying and selling with smallish losses which add up over the course of a period. So here we can see back in July of 2014, the market broke out, was in a nice uptrend, and then collapsed almost from just under 2,000 to almost 1,900, only to go parabolically up again, break out to the upside again, and then some bad news or whatever was affecting the market, and then to collapse again, this time from above 2,000, which is a breakout, which normally goes in the direction of the upward move, and this time we went down to 1,800. Only then to go parabolic to the upside from 1,800 to just up around 2,075. So we've broken out above these tops. We've got a great new trend starting, and then what happened? We've gone from 2,075 to 1,975 in a matter of days, and then we've gone parabolic again, broke out, and then we've gone down again, and then we seem to have stabilized, broke out again, crashed again, and then we've had all this up and down. Quite an exhaustive drop here. This looked like a downtrend, then we resumed on the way up, and then look at this. In August of 2015, when China was collapsing, the S&P went from 2,100 to 1,8750 in a matter of 3 days. And some stocks, some very big stocks, like Starbucks, let me just add Starbucks to our list here. So you can see, Starbucks, where are we? There we go. Starbucks went from, wait for it, it went from 58 to 42 in a matter of just over a week to 10 days. And the biggest drop was here, where it went from 57 to 42. That's 22% drop in 3 days, and then a rebound. This is what we've been putting up with. This is the unusual market condition of the last year, and the Nasdaq has been doing that. So this is giving false directional buys and sells at least 6 times during the year, adding up to more significant losses. It is proactive in approach because we are following trends, but they aren't following through. This period normally doesn't last more than a year, been a bit more than a year. It looks like now we've got a new uptrend. What's been happening elsewhere? Well, this is Europe. This is Germany, for example. Massive downtrend here, so we haven't been in Europe. The European ETF fell from 32 to 25, which is about 20%. Then this is all sorts of volatility. It showed signs of recovering, didn't last, and then it went from 31 to 24, which is another 22%. Then it appeared to be breaking out. Then it went from 27 to below 23, which is again about another 18%. We might be in an uptrend now. Where else could we have gone? Emerging markets. Well, that's even worse. We've had end of 2014. This ETF went from 142 to 80, then seem to have stabilized, appear to be breaking out here, only to find it go from 122 to 40. 60-odd% drop, some kind of rally, didn't last, went from 60 to 30, 50%. Now we appear to be in an uptrend. So not easy in any shape or form. And then we've got the likes of Apple. My laptop will behave itself. Apple, it's into all sorts of things. It's into Apple Pay. Its forward earnings are quite good. Its P ratio is relatively low. But again, the end of 2014, it went from 120 to 108, but a 12% drop. Looked like breaking below support into a downtrend, only then to turn around and go from 115 to 130. It's not a bad move, roughly a 10% move, then choppy, and then we went from 132 to the bottom in August of 92. That is a 40-point move, which is somewhere in the region of just about 28%. Boom, we rebounded. We then started to break out to the upside here at 120, only to find it to go from 120 to 92, which is 28 points, which is a 24% drop. Again, fundamentals haven't changed. Now we seem to be in an uptrend again, so we're following the uptrend. Facebook will be a similar scenario. The UK all over the place. Again, look, rally, big sell-off, big rally, sell-off, rallying back up, then only craters back down, drops in August from 6750 to 5750, tries to break out, collapses from 650 to 550, maybe stabilizing now. Where we are looking for gains is we've gone into, in our special situations, we've gone into recovery situations like gold and silver. So here's nugget that we've got, up 9.1.6% on Friday. We are buying in really, really low here, because if we look at the chart here, in 2011, this fund was, believe it or not, 20,000, and today it's 71. Looks like a brand new uptrend, and some of the smartest money I know are buying in heavily into gold and silver, believing because of the closure of so many mines and the inability of miners to get finance, so closure of commodities all over the place, we are in the start of a brand new bull market in gold and silver. We have seen it decouple in February here. This is gold going up, and also the dollar went up. So normally dollar goes up, gold goes down. This hasn't happened. Gold's going up, the dollar went up. Dollar's a bit weak overall. Gold looks stronger. So we're positioned in this already. So it's looking very, very good. So right now, the volatility is what's caused the problems of the last year and a half for market traders. We've got a brand new uptrend seeming to be formed right now. Here's emerging markets, how they got crucified. In April of 2015, this fund was 122, went down to 30. We appear to be in a brand new uptrend right now. But watching it closely, we're not getting overexposure, and I do believe there's some significant gains to be made in the resources in energy sector, and especially gold and silver.